Fractional ownership in real estate offers a game-changing opportunity for individuals looking to dip their toes into the world of property investment, even if they don't have a hefty bankroll or backing from institutional lenders. This tried-and-true ownership approach has been quietly revolutionizing the real estate landscape, gaining momentum and piquing curiosity because it grants ordinary folks genuine property ownership rights at a fraction of the traditional cost. In the ever-evolving realm of real estate, novel concepts can often leave us feeling a bit bewildered. Fractionalized ownership frequently falls victim to misconceptions, gets entangled with other investment strategies, and faces resistance due to its divergence from the norm. Fear not. In this video, we're about to unravel the mystery surrounding fractional ownership, distinguishing it from the crowd, dissecting its advantages in comparison to other real estate investment methods, and equipping you with the knowledge to navigate potential challenges that may arise when embracing this unique approach to real estate investment. Let's embark on this enlightening journey together. Overview of fractionalized ownership. Fractionalized ownership, in essence, boils down to owning a slice of the pie rather than the entire confection. This approach becomes a game changer when it comes to acquiring a stake in assets that would otherwise remain tantalizingly out of reach, financially speaking. Imagine owning a private jet, a luxury typically reserved for the elite. Well, with fractionalized ownership, both individuals and businesses can secure a piece of the aviation dream. They invest in a specific share of ownership in the aircraft, granting them the privilege to enjoy it part-time, all the while shouldering only their fair portion of the operational and maintenance expenses. Now, let's zoom in on the real estate arena where this captivating concept takes center stage. Instead of the daunting task of amassing a substantial lump sum for a whole property, along with the exclusive responsibility for its upkeep and costs, fractionalized ownership emerges as a beacon of opportunity. It beckons with a lower entry cost and spreads the financial obligations among a collective of co-owners, making real estate investment an accessible and collaborative venture. Welcome to the realm where investment dreams become attainable realities. How does fractionalized ownership of real estate work? In the world of fractionalized ownership, a nifty mechanism known as a special purpose vehicle often takes the spotlight, usually in the form of a limited liability company. This financial wizardry conjures up a pathway to property ownership with a surprisingly modest entry fee. Here's how it works. Each aspiring fractional investor contributes a sum representing their slice of the ownership pie in the investment property. But the beauty of it all lies in the flexibility. Investors can scoop up additional shares to their heart's content. Now, let's dive into the juicy details. As owners of these fractional slices, investors not only get to bask in the property's value and income but also bear a share of the responsibilities, from maintenance to taxes and various assessments. It's all quite equitable, with each investor's obligations directly tied to their ownership percentage. The icing on the cake. This approach bestows upon every investor the coveted status of an equitable title owner of the investment property, all without the headache of mustering a hefty sum of cash or resorting to potential loans for property acquisition. Welcome to the world where property ownership dreams come true without breaking the bank. Fractionalized ownership versus timeshares. Now, let's address a common misconception that often swirls around the world of fractionalized ownership: its apparent similarity to timeshares. Yes, they both involve multiple parties sharing access to the same slice of real estate. However, let's clear the air and make no mistake. Fractionalized ownership and timeshares are as different as night and day, with a multitude of distinctions setting them apart. To begin, both grant you the coveted right to enjoy the property, but here's where things diverge dramatically. Fractionalized ownership goes above and beyond, delivering an authentic ownership stake in the property. In other words, you're a bona fide property owner with all the perks and responsibilities that come with it. Timeshares, on the other hand, offer nothing more than the privilege of using the property during specified time slots. Think of them as a room in a hotel or a resort where you're confined to predetermined schedules. Picture this. Fractionalized ownership properties often grace the landscape of sought-after second home communities, embodying the very essence of flexibility. You and your fellow owners can harmonize your schedules for the ultimate convenience, ensuring that your real estate investment adapts to your lifestyle, not the other way around. It's the key to unlocking the true potential of property ownership without the limitations that come with timeshares. Welcome to a realm where ownership equals freedom. Fractionalized ownership versus REITs. Now, let's shift our gaze to another intriguing comparison: fractionalized ownership versus real estate investment trusts. While they might seem like distant cousins in the world of real estate investment, rest assured they have their own unique identities. When you invest in a REIT, you're essentially purchasing a stake in the company that holds the investment property. It's a financial security game, detached from the tangible property itself. On the flip side, fractionalized ownership takes you down a different path. Here, you're not buying into a company. You're becoming a partial owner of the actual physical property. That's right, you hold a share of the real estate itself. Let's talk about flexibility. With REIT investments, they often dance in the public or private trading arena, their fate determined by property management teams. Contrastingly, fractional ownership hands you the reins. You have the power to gift or sell your property share at your discretion. It's a level of autonomy that can make all the difference. Now, here's where things get interesting. Fractionalized ownership gifts you the freedom to choose your real estate adventure. You're not boxed into specific property types, unlike REITs, which tend to specialize in particular niches like shopping malls or storage facilities, as dictated by their property management teams. It's a world of distinction where your investment choices are as diverse as the real estate market itself. Welcome to the realm where ownership takes on a whole new dimension. Pros and cons of fractionalized ownership of real estate. Now, let's delve into the nitty-gritty of whether fractionalized ownership is the right move for your real estate investment journey. Like any strategy, it's not a universal fit, but it does offer a captivating array of advantages that might just make it your perfect match. Pros: lower cost of entry. One of the standout features of fractional ownership is its welcoming embrace for investors of all financial backgrounds. You can acquire as many shares as your heart desires, all without the burdensome constraints of high credit scores or a massive cash stash. This means you can set your sights on higher quality properties and prime locations that might have otherwise been reserved for the elite few. Diversification. Variety is the spice of life, and fractionalized ownership takes this adage to heart. Regardless of your investment budget, it offers the flexibility to build a diversified portfolio. You have the power to determine how much to invest in a single property and even what types of properties to explore. It's a golden opportunity for investors keen on expanding their horizons and gaining insights into different markets. Passive income. The solo journey of property ownership often involves a host of headaches, from property management to maintenance. But with fractionalized ownership, a property management company usually steps in to shoulder the weight. They handle everything, from repairs and maintenance to accounting, advertising, and legal obligations. You, as a fractional owner, can sit back and enjoy the perks, namely passive income derived from rent and capital appreciation. Tax advantages. Tax season might not be your favorite time of year, but as a fractional owner, you're entitled to the same tax benefits as a traditional real estate owner. The beauty lies in the proportionality. Your benefits align with your share in the investment property. Liquidity. While fractionalized ownership leans towards the long term, it's typically more liquid compared to other real estate investments. If you decide to part ways with your shares, you often find willing buyers more swiftly than someone attempting to sell an entire property. Cons. Fees. Like any investment, fractional ownership isn't fee-free. Be prepared for additional charges from the LLC, encompassing administrative and startup costs. These fees can vary depending on the LLC and the property's specific demands. Earning potential. While passive income is the name of the game, its consistency can fluctuate depending on the investment property's needs. It's important to weigh this against potential returns from alternative investment avenues. Legal restrictions. Unfortunately, fractionalized ownership isn't an option everywhere. Legal limitations may restrict your investment opportunities in your desired market or even eliminate them. Liquidity. Unlike the nimble world of stock trading, transferring shares of fractionalized ownership often involves contractual time constraints imposed by the LLC. Be prepared to navigate these intricacies when considering your investment timeline. So, as you ponder your next real estate move, keep these facets in mind. Fractionalized ownership might just be your ticket to a more accessible, diversified, and hassle-free real estate investment journey. Welcome to a world of possibilities. Getting started with fractionalized ownership. As you tread the path of real estate investment, it's essential to gaze into the crystal ball of potential risks. Fractionalized ownership, while a compelling option, introduces its own set of considerations that demand prudent evaluation. Here's a glimpse into what lies beneath the surface. In this realm, you're not just dealing with your run-of-the-mill real estate documents. Oh no, you're entering the domain of corporate paperwork, where owners purchase their respective slices of the property pie. It's a legal landscape that demands attention to detail. Now, brace yourself for a subplot. As fractionalized ownership gains momentum, so does the pushback from municipal zoning boards and neighboring property owners. They often raise their voices in opposition, reluctant to embrace properties with multiple owners in their vicinity. It's a hurdle that requires strategic navigation. And let's not forget the complexities of taxes. Understanding the tax implications in this arena is pivotal. It's a web of intricacies that can significantly impact your financial picture. So, as you embark on your real estate journey, remember this golden rule. When in doubt, seek legal counsel. With purchase documents, corporate formations, tax codes, and zoning laws in play, professional advice is your compass in this intricate landscape. It's the insurance policy for making informed decisions in the world of fractionalized ownership. Welcome to the realm where knowledge is your greatest asset. Conclusion. Fractional ownership represents both a time-honored and contemporary approach for a collective of individuals to delve into real estate and secure ownership of a secondary dwelling. For those well-versed in its intricacies and equipped to navigate potential challenges, fractionalized ownership emerges as an approachable avenue to dip one's toes into the realm of real estate investment. And there you have it, a comprehensive exploration of the captivating world of fractionalized ownership in real estate. We've unveiled its secrets, dissected its pros and cons, and illuminated the path to making informed decisions. But wait, there's more. If you're intrigued by the concept of real estate without owning property, simply click on the video displayed on your screen. It's your gateway to another exciting facet of real estate investment. Thank you for joining us on this journey.